Welcome back to First Trades right here on ET9. And let me welcome Punita Kumar Sinha, Managing Director of Pacific Paradigm Advisors. Hi Punita, morning. Good to be speaking with you. And Punita, firstly, with respect to the global setup right now, I remember that the last time we connected with you, you were actually a bit in shock. You were saying that the markets for now are ignoring all the geopolitical tensions and the concerns out there, and they are continuing their journey upwards. And there's been no stopping specifically for the US markets. Punita, help us understand, how are you gauging the market sentiment right now? And with so many deals through, do you believe that the real impact with respect to tariff, with respect to slowdown concern, is something that we should be seeing in some time from now?
First of all, on tariffs, I think we'll have a much better idea by the end of this week, which is the deadline. So I think it's no point speculating. But in general, what we've seen for most countries is in the range of 15 to 20%, and that's significantly higher than what it used to be. So on India too, I think it's in the interest of both countries, given how important this trading relationship is between US and India, that these, negotiations go well. And as you can, from the past trading history, you can see that actually both countries trade to their competitive advantages with each other. India on IT services and certain other things where US is not as competitive, and US bringing things to India where India isn't as competitive. So it has been a good relationship in that sense. And I think it's an important relationship. So I hope those tariffs negotiations will work out well. But the guidance, of course, based on what we've seen in other countries, 15 to 20%. And if that happens, then I think some of it is factored in, but some sectors could still get negatively impacted, particularly the exporters. So I have been consistently saying to kind of stay away from exporters, from pharmaceuticals, because of the risks, unless they have, already factored in some of these tariff increases and diverted their trades to other countries where there are more friendly regimes. So that's on that front. Second, on I think the geopolitics, I think those continue to be worrisome. And it's not just the wars. I think it's, we are seeing disruption in economies. We've seen today an earthquake in Russia that could have some other ramifications, if there are tsunamis and there's more destruction. So it's the global environment from a geopolitics standpoint has not been friendly. The markets have been ignoring it, and there is still a lot of liquidity.
Absolutely. A lot of food for thought there, Punita. But, I want to talk about Trump's commentary coming in overnight, wherein he's saying that India will pay 20 to 25% tariffs. It's not a done deal yet. He did say negotiations are still on. But assume that it is the worst case scenario and it does come to 20 to 25%. Do you think that's in the price, or does that give reason for the equity markets here in India to fall?
I think to some extent it's in the price because it has been discussed now for several months, but then it might impact the companies individually based on how they have been offsetting it and what provisions they've been making. So it will probably require some deep dive into the individual companies themselves. So I think that there could be some knee-jerk reaction if that happens on the downside to some of the companies, but then you'll have to kind of research them. But yes, the sectors, that are going to be most impacted are the exporters. That includes pharmaceuticals.
But Punita, the other big move that we are seeing in the past couple of days is actually the oil. Because as we know that Donald Trump has highlighted in the past as well that he wants to keep the prices suppressed and at lower levels. But despite this fact, on the back of the sanctions and the threat regarding that, the oil is on the up move. How do you see this panning out? And in the near term, can we expect a bit of a more run up in the Brent crude oil prices?
So I mean, to first qualify, I'm not a commodity specialist, so I really can't, I don't make predictions on oils and commodities. But I would just say in very general terms that I think we are seeing, um, commodity prices on the up move, particularly metals. We've seen gold and silver and copper and several other metals. And when I look at the past cycles of metals, I think it looks like there could be more upside, given the demand is pretty strong. And with oil, with the disruptions from Russia, um, if there are sanctions, etc., I would expect that if the global economy, which is showing some signs of improvement, would mean that the demand should improve, and if the supply is reduced, then typically, I mean, you would think prices would go up, but I'm not a commodity expert.
In that, Punita. But tell me, since you did talk about de-risk your portfolio right now, keep it domestic linked, you don't know what's going to come out of the negotiations between India and US when it comes to tariff. Is the earnings slowdown or softness, I should say, slowdown may be a little stark word. Do you think that's concerning? And especially the higher provisioning done by banks pretty much across the board, Punita?
Yeah, so on the earnings, the earnings are definitely been on the disappointing side, on the lower side for India. And when you analyze the earnings based on the large, mid, and small companies, you see that it's probably like 50-50 at best of companies that have surprised on the upside and 50% that have surprised on the downside. So the earnings picture is quite mixed. And while, and profitability, profit growth is been around, on average between 9 to 13% or so. So that is quite low for India, because India has historically seen 15 to 20% growth in earnings. And that's been, there for a long time. So this is actually low relative to India, and also given where the valuations are. But there are, like, the PMI data came out, good. L&T earnings results were good. Government spending and capex is picking up. So so it is, as I said, while it's a mixed bag, there are some companies that are reporting positive surprises and some negative. So I think it's time to be very selective and bottoms up rather than thematic only. And I think the capex cycle, especially from the government, seems to favor certain sectors that could, include infra, manufacturing, cyclicals, and now coming to provisions of the banks. I think a lot of those, last year we saw stress, especially on the unsecured book. But I think rural, I mean, again, while it's not clear, there are green shoots on the rural economy picking up with a good monsoon. And as the rural economy picks up, the distress on the unsecured sector could reduce. And so I think that there is some pickup that is going to happen. And the provisioning may not be as bad as it's been in the past. And I think the financial sector should see some improvement on that front.
Fingers crossed on that, Punita. Always great chatting with you, and come to our studios next time you're in Mumbai.
Thank you, Aisha.
Bye.